returns have been quite good over the last 3 to 4 years, so I think investors are starting to get nervous about whether it can continue. Interest rates are low and that's very supportive of risk assets. On an absolute basis, equities look quite expensive, but relative to other asset classes, it seems like the place to be, so equities can be supported throughout 2015. But I think there's risks out there and investors need to be cognisant of those risks and really manage their portfolios accordingly. The Morrows Investment Committee is currently focused on managing risk and return, and the risks that we're currently focused on are around fall in oil prices. That's got the market talking, and I think if oil prices continue to decline, it will put stress on equity markets. There's also concerns over growth coming out of Europe and Japan, and also a slow in China and what implications that will have for returns. I think valuations are looking quite stretched, but that doesn't mean they can't continue to rise, but we really need to see earnings growth come through to support further upside. And I think the other key issue we've got to focus on is around geopolitical risks. With money printing and central bank policy actions, it's creating a lot of geopolitical risks out there. The Morrows Investment Committee is focused on both sides, and we think it's prudent to also focus on those downside risks, but we do not want to ignore the opportunities because there's good returns to be made out there for investors, just like there was back in 2014. Well, we're remaining defensively positioned. There's a lot more volatility, so we want to keep investors invested effectively and not being spooked by these markets. We've got a greater emphasis on absolute return type of strategies, and that relates to strategies that can provide investors with positive returns regardless of whether the market's going up or down. We're now 6 years into the current bull market cycle, and whilst we can't pick tops and bottoms, and we're not trying to, we think that risk management is prudent in the current environment for all investors. Investing is a long-term strategy. Whilst we're quite cautious about the short term and the heightened volatility, we've got a long-term strategy and investors need to focus on the long term. We're monitoring the risks, we're monitoring the returns, we're ensuring that the client's risk objectives can be met. So from the perspective of should the client stick with the Morrows strategy? Definitely. Markets have been quite good, but investors are nervous, and it's the geopolitical risks and the surprises that we're seeing, and also valuations, because the markets have been so good, that makes investors nervous, and we can understand that. We're monitoring those risks, but investors need to look through the cycle and just understand that it's about managing risk and return. The ultimate goal for all investors is to meet their objectives. And the aim of putting a portfolio together is to meet those objectives. There's no point taking on excess risk if your objectives don't require that. I really want to see investors achieve their return objectives, and the Morrows philosophy enables them to do that by taking more of an absolute return approach, having downside protection and giving them a smoother investment return over the long term, so that we can take the worry away from them. Let us worry about it. And we'll deliver you your return objective.